Hello, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm very, very happy to be with you guys today for the snapshot. Okay, so let's start. So for today, we are really going to have a look into Bank of Japan and what they decided from their conference today. And then we shall also have a review of some of the FOMC movements, post-FOMC movements, what we are seeing on FOMC and how we can expect to position ourselves going into the rest of the day-to-day. And of course, even taking into account how we can use that for trading next week. Yeah, so to start it off, let's just have a look at the DXY. For the DXY, the last time we met, I had indicated to you guys that if we get a hawkish pause from Jerome Powell or from the FOMC, then we'll definitely get relatively push higher. And also, I also indicated to you that the DXY had been in a steady uptrend. As you can see, from December, we have been steadily rising on a DXY, and we have currently gotten a nice break to the upside on a DXY. So it looks very likely that a DXY is most likely to push to this level. And that's technically looking at it. And again, if you look as well also at how we fared around the time when we got the news for CPI, the CPI came in much weaker than expected. And yes, much as we got a dip on the DXY, we saw that it recovered later to see the market steadily moving to the upside. Now, what I need to mention is from some of the comments we got from Jerome Powell, I took notes from the conference that we had with Jerome Powell, and this were some of the things that were really the discussion between him and the journalists that were present at the conference. The first one was regarding the change in the stance from the FOMC. Remember when we began when we started the year, FOMC, the Federal Reserve Committee had indicated that they are going to do about 3 rate cuts this year, 2024. About 75 basis points from the current target range of 5.25 to 5.5, and that slowly changed to now what is 1 rate cut. Okay, so the Fed has indicated that they are going to look at cutting only once this year, and some of the reasons they are giving for that is they are saying that the U.S. economy is still strong. And I think one of the reasons why they are indicating that is because of the NFP numbers we got. So if you remember NFP numbers we got last week, the NFP numbers were actually very, very strong. We saw a very big push on a very big push on the DXY. If you see this candle which we had for DXY from this level here, from that 103 level, that was actually because of the NFP. So CPI and PPI came and had a push on the DXY, the dollar index, but we saw that move getting reversed to the upside. So all this was because of that hawkish comments. Now the other one is Jerome Powell from the FOMC conference indicated that he does not trust the inflation data that's coming out, and that for them to decide they need more data. Okay, so which means he kind of put aside the report that we had from the CPI data we got on Wednesday. He said that data does not in any way influence any decisions from the FOMC, and I suspect that is one of the reasons why we also saw a weak gold on Wednesday, as well as also a weak Euro USD and weak GBP USD, as we shall see on the MT5. Now, going into the next months, we have the next FOMC conference next month, that is in July, and we will then get an idea of what the Fed thinks. But for now, I expect that over the course of the next few months, we are going to see a steady uptrend in the DXY, and then we shall see some weakness on some assets like the indices, like gold, GBP USD, and Euro USD. Now, going to the calendar for today, the main event we have today is the Bank of Japan conference. The Bank of Japan released their policy statement at 5:30. We are going to go through it. And then in addition to that, we also saw some data coming out from the Eurozone. The latest from Eurozone, we've been getting some indications that there is there are sort of tensions, political tensions, of course, with France. I don't know if you guys have seen that. And the risk premium for France has also increased simply because of the tensions that are happening. Macron dissolved his parliament, and there's also likely going to be a snap election in France. So if you look at the indices, especially the indices in the Euro indices, you notice that most of them have been undergoing very sharp selling. That's for you guys that are trading Euro indices. A lot of them are in a very sharp sell, and that's because of some of those tensions that we are seeing in the Eurozone. So if you're trading DAX, I think Rufus must have also indicated this yesterday. DAX, the Euro 50, all of them are in sharp sells, okay? The one that is not responding that much to a sell is the one in the UK, but France, Germany, all of those are in sharp sells because of those tensions that we are seeing with France. Now, going into the rest of the day, we have Michigan consumer data. Some of the data is coming out at 5, then we also have some data coming out at 6 p.m. We have the Fed monetary policy report coming out at 6 p.m. And the main thing to focus on today is really to look at the Michigan data, which is going to come out at 5 p.m. And then, of course, let's just review what the Bank of Japan has mentioned. Now, before we go through some comments from the Bank of Japan, I just want to mention typically what has been the comments from Bank of Japan since their previous meeting. So Japan has been having issues with their inflation. This is a multi-decade issue, okay? The inflation has been low from the previous conflicts they've been having, some of the disasters. If you guys remember the tsunami that they had, then of course we also had what was it? We also had that 1980 economic crisis in Japan. So the economy suffered a lot during those periods. So they've been struggling with their inflation, and that's the reason why even when they came close to lifting off their rates from negative, remember their rates were negative. If you look at the interest rate for Japan, it was negative 0.1. They increased it to about 0.1%. But despite doing that, it was sort of like a dovish hike, okay? Because they are not yet convinced that they are going to hike more. And also looking at the GDP is they entered a bit of a technical recession in Q1. On top of that, the inflation has also shown signs of a lot of weakness, and that has had a very, very big effect on the Japanese yen. Okay, if you look at your JPY charts, I can just use the one on investing.com. Just have a quick look at it and really just see it on the 6 month. You will see how it has been, declining tremendously on the side of the dollar, on the side of the yen. And all that has been because of some of the actions that the Bank of Japan has been taking. Now, for today, and even from earlier in the week, I think from the earlier months, we've been bullish on the JPY pairs. I don't think I know anyone who has been bearish on the JPY pairs. Most of these things have been pointing towards a weak JPY. Okay. Now, let's look at some of the comments we got from the Bank of Japan. Then we shall go through the statement, and soon after that, we shall cross over to the MT5 to look at the charts. Now, we have some comments from the Bank of Japan governor, who has indicated here that they are likely that they're going to look at hiking in July, but still it's a vague guidance, very vague, because it's saying a rate hike in July is naturally possible depending on data. That is zero signs of certainty with that rate hike. So we might come to July and then they don't hike because it's majorly going to depend on the data. Keep in mind that the GDP data in Japan has also been showing signs of weakness. Same thing also with the inflation. So they are not likely to hike again. And they are also not likely to reduce their asset purchases too quickly. Okay. Yeah, so that's really it from the Bank of Japan. We can cross over and look at the statement just quickly. I don't want to go too deep into the statement, so we'll just skim through it. As you can see, some of the comments from the statement, we are saying the bank will encourage uncollateralized overnight call rate to remain at around 0 to 0.1%. Again, they are not increasing that because they want to keep an accommodative condition within the economy to support it. Then, of course, we are seeing here Japan's economy has recovered moderately, although some weakness has been seen in part. Overseas economies have grown moderately on the whole. Exports have been more or less flat. Industrial production has been more or less flat as a trend. So you can see all this is pointing to signs of weakness. Okay, exports are not increasing as they would wish. Industrial production has also not been really too high, and all that really they have to, before they hike. Okay, they have to ensure that all that gets in line with the expectations. Private consumption has been resilient, although the impact of price rises has remained, and automobile sales have continued to be pushed down by suspension of shipment. Again, this also affects the inflation, so they will not look at rate hikes until they get, these price rises coming in. On the price front, the year-on-year rate of increase in consumer price index has been in a range of 0.2 to 25% recently, as service prices have continued to rise moderately, reflecting factors as wage increases, although effects of pass-through to consumer prices of cost increases led to a past rise in import prices have when inflation expectations have risen moderately. So they are just rising, not too high, but just moderately. Okay, so most of this is really dovish and weak for the yen, and you should see a much weaker yen going into the rest of the month and possibly even into July. Now, concerning risks to the outlook, there remain high uncertainties surrounding Japan's economic activity and prices, including developments in overseas economic activity. So this strikes a dovish tone again, guys. If they see high uncertainties, they are not going to be too quick to hike the rates. Okay, and even if they do, the rate of asset purchases is not going to decline too much, because if it does, then it can affect their inflation targets. Okay, yeah. So let's go over to the MT5. I think I'm through with whatever I wanted to take you guys through on the DXY. So we're through with the DXY. I don't think there's anything more I need to go over on the DXY. You guys can clearly see the kind of trend we are in here. Okay, we are clearly in a steady uptrend over there. Okay, guys, let's cross over to the MT5, see what is happening there, and then see where to go from there. If you have any questions, especially around Bank of Japan, you can post your questions there, and I'll be able to go over them. So I'm going to start with anything that is JPY. Okay, so I'm going to start with USD JPY, and then I will cross over then to GPP JPY, and then from GPP JPY, then we can cross over to other things. Now, guys, USD JPY has been in an uptrend. Okay, it's been in an uptrend, and this uptrend has been there since the start of the year. Okay, we've been moving higher and higher and higher. Okay, so going into the Bank of Japan conference, I was bullish on USD on the dollar. Okay, simply because again, I was not expecting that much of a change in commentary from the Bank of Japan. Every single time we've been having their conferences, they have indicated that they are not yet convinced about the progress on inflation. Economic activity has not yet increased as much as they would want, so they still need to see more, there for the economy. So that has really affected the yen, and that's the reason why we are seeing a relatively stronger Japanese USD JPY. So going into the day, I'm expecting us to potentially see a move higher here, possibly towards this level here of this rising channel. We were previously in a rising channel here around April, sold after that CPI for 14th May. Then we got into a rising channel with higher lows, okay? So USD JPY is still a buy on all fronts, and you guys should be looking for buys whenever you get a retracement. Look for a buy, okay? So going into the lower time frames, just to see how the currency reacted to the announcements today. So from today, first of all, when we got the red decision, we saw a liquidity shift to the downside, but then we saw an immediate shift to the upside, okay? All of this showing signs of JPY weakness. Now, as you can see right now, USD JPY has sold a bit from those levels, but I'm expecting it to possibly move back to this level here over the course of the day. Since we are still in a technical uptrend, we should see the market steadily rising for USD JPY and taking it to the upside. Now, USD JPY has a lot of signs of upside momentum, and you'll be able to tell that even from the number of liquidity sweeps we have been having. There are very many, okay? We had one here, we have some others here, so they're actually quite many, okay? So ideally, how to approach this is look for a buy, set your stop loss towards the open for Asia. In case we see a very sharp sell, we'll have to take out the Asia low. If we don't take out the Asia low, USD JPY is going to start moving to the upside and possibly reaching as high as 160, okay, over the next few days. Now, we all know that whenever we are looking at anything that has the dollar, we focus on the dollar index, okay? The dollar index is in a technical uptrend, okay? Look at it on a 4-hour, look at it on a daily, you can be able to see that we're in that uptrend. And that uptrend resonates very well with the uptrend we are seeing also on the USD JPY, okay? So it then means that for a trader who is there trading USD JPY, you need to have a bias. You need to have a bias for the uptrend for it, okay? So that's what we're having. Now, the pullback that we are seeing currently is simply a pullback from the news, okay? So when the dust settles, the market is going to move in that uptrend as we have highlighted. Now, let's cross over to GBP JPY. GBP JPY, for those of you that might not be aware, we have something we call the carry trade. So carry trade is something we talk about in currencies where we say for investors, they will put money. For investors, they will put money where they will put their money in a currency that has a higher interest rate regime. Okay, if maybe I have $10 million, okay, and I want to put that money in a money market asset, I will not put it in the money market assets for Japan. Instead, I'll put them in money market assets for the pound, okay? Because the pound is higher interest rate bearing, okay? I earn more interest on the yen, on the pound than on the yen. So for a forex trader, when you speak about that in terms of trading, we say that compared to USD JPY, GBP JPY actually has a much bigger chance of a bigger uptrend than USD JPY, okay? So if I'm to pick between the two currencies which one to buy, I would be looking at buying GBP JPY as compared to buying USD JPY, only on the back of that carry trade, okay? Only on the back of the carry trade. Now, what that means for you guys is you need to look for trades on GBP JPY, buys for GBP JPY, also because we're in that steady uptrend for GBP JPY. Now, Going into the day, this is how I would approach trading GBP JPY. Just like I've mentioned for USD JPY, we are currently selling a bit, but that's because we are currently in news. So wait for the dust to settle. When the dust settles, then you can look to buy around the Asia low, okay? Remember, if we take out the Asia low, then we are going to look for a sell, temporary sell. If we don't take out the Asia low, we are going to move towards the high for London in a New York session, okay? That's how you're supposed to approach trading. Okay, so let's cross over to gold. Now for gold, this is what I have on gold, guys, okay? Gold has been having a lot of signs of support, okay? We've been speaking about this, I think, for very many snapshots. If you look how gold was doing in April, you can see here that we had gold moving steadily to the upside, and then getting back into this zone in April. We got back into this zone, bought out of that zone again, got back into the zone a bit during yesterday's US session, bought back a bit. Now, the buy that we had for gold from CPI, okay, that buy we held from gold from CPI was typically a fundamental move, okay? So you notice that the CPI buy we had was immediately reversed. The PPI buy we had was immediately reversed, okay? And now gold is moving steadily higher as it waits to pick up some liquidity for a sell, okay? At the moment, awesome. At the moment, gold does not have enough supply for it to take it to this level. Most of us are waiting for a proper sell on gold, okay? That sell has not yet come, but when it comes, you're going to be able to tell because we shall take out this demand zone on the H4 that is between 2,287 and 2,272. Once we take out that demand, gold is going to enter a sell, but it right now is in a demand area that we need to look into buying at, especially around this level here, okay? So even yesterday, I actually was bullish on buying gold down here because it's been holding off support at this level, okay? Now, where should you sell gold from in case maybe today it sells a bit? If you go to the H1 time frame, this is what you'll be able to see on gold, okay? Gold has been creating some kind of first of all, on the H1 time frame, I'm seeing a bearish flag, okay? I actually didn't see it, I'm just seeing it right now. There's a bearish flag on gold, okay, around here, okay? Bearish flags typically tend to form when the market is in a downtrend, but whenever the market buys a bit, they do not hold their price action for long. So where you're expecting it to continue in a rising channel, that rising channel tends to get broken, okay? Just like we saw gold selling along these levels here. Now, I would want to get in at the highest level possible for gold, okay? Because the higher you get in for gold, especially since we're in a downtrend, the better for you if you're to get as many pips as possible, okay? Now, looking at how silver is doing today, there are very, very few signs that gold is going to sell, but you have to keep an eye on the New York session. If New York, first of all, takes out, we have to first take out this level here, okay? If we take out this level, and most importantly, if we get into that demand zone for gold, then we are going to see some serious selling kicking in. But for now, gold does not seem like it's going to sell too much, but the bias is a sell, okay? So if I'm to trade gold within the day, I would look for sells and maybe possibly set my stop loss towards PPI highs. PPI highs were around 2,227, somewhere around here, okay? This was the high for PPI, US PPI when it was released then. The PPI high, PPI high 2,225 to 2,227, okay? Those were the levels for PPI. So if we fail to break this level here, and instead have a move higher, I would want to have my sell limit around here, so that once it's triggered, have my stop loss above here, okay? Have my stop loss above here. If we take out PPI highs, then we should see gold reversing and possibly selling, okay? Gold needs to convince us that it's really buying, guys. Do not get tricked by gold, okay? Because we've seen this, we've seen how it's been showing us upside momentum, relatively weak upside momentum. But then when the US session comes, that liquidity is taken out and we see a very sharp sell. And then the cycle repeats. Sells back to this level, buys back again, okay? So we need to have a sell that takes us beyond that demand zone, okay? And then further lower to the downside, okay? That's what we need to see on gold, but don't get swept into its price action too easily for the buy. Otherwise, you can end up getting trapped. Now, there have been some indications. I'm sure most of you must have seen online that, of course, Putin, the president of Russia, has taken some of his tankers. I don't know, tankers or submarines to Cuba. Okay, of course, trying to not really showing intent to fight the US and NATO or NATO, but the fear is not in the market as of now, okay? Because this is the fear index. We are not seeing any signs of fear in the market. If there's any catalyst that is going to bring in fear, it's not yet there, okay? So yes, some traders are talking about Putin and how maybe Putin may do anything. Putin, we need to get fear priced in right now. There's no fear in the market. So therefore, there are not too many signs that gold is going to buy too much, okay? But in case it does, then you can see how to go about it. Now let's quickly go to Euro USD. Now for Euro USD, we're in a downtrend channel, okay? We had a very strong a very weak CPI reading yesterday that took Euro USD to the upside, where you see that big blue candle. That was the CPI data. And then, and of course, if you recall that the setup we had for Euro USD, we had this condescending wedge. We said if we break above the condescending wedge, we'd be looking for a buy, okay? You can just revisit my Wednesday snapshot. It's on YouTube, okay? That's what I said. However, you can see that the barrier for Euro USD for buy side to kick in is up here, okay? Which it did not even manage to get to, okay? FOMC came and the FOMC commentary was relatively hawkish, which sent Euro USD to the downside. So at the moment we have taken out our discount, we're now in the discount zone on the H4 time frame, and we have now sold even below our 61.8% fib level. We are now in a descending channel, okay, on Euro USD. So it was easy for many traders to switch sides on Euro USD after the CPI we got, but as you can see, the CPI move has been completely reversed to the downside, okay? And we're already seeing those signs of selling momentum that most likely is going to open the doors for us to see Euro USD entering into a sharp sell, even lower, okay? Now, I would want to think that the Fed and the ECB have divergent policies at the moment, okay? ECB they did their first cut this month. They cut their rates by 25 basis points, or 0.25%. Federal Reserve has not yet cut their rates. And first of all, to make matters worse, they've even reduced the number of times they're going to cut from 3 times to once, okay? So when you look at it in terms of the divergence of policies, I think the euro is going to sell much, much further than it is right now, okay? But it will do that in phases, okay? So already the London sale is done, okay? So you might want to wait for the New York pullback and then you get into a sell for Euro USD. So at that point, I think let's now cross over to GBP USD. GBP USD, initially we had a sell channel here. If you recall from the snapshot we had on Wednesday, I had my sell channel here on yeah, it's paying me. So, like I was mentioning, guys, we had a sell channel here on GBPUSD, but this sell channel got invalidated because of the weak CPI we got. Okay, so GBPUSD pushed through that barrier we had, but immediately after pushing through that barrier, because it was not meant to buy too strongly, it immediately got back into a sell. Okay, so you can see there we saw GBPUSD reversing its complete move, and now it is holding price action towards it has got, it's like it wants to come back to our descending channel for a sell. Okay, so we took out this liquidity, took out at two levels there where we had a sweep, and then this level where you see my box there is where we had our supply zone seated even from March. Got into that area there, sold, and then now we're back into selling. Okay, so what's the idea for today? Now for today, GBPUSD, just like Euro USD, it's a little hard to read, but what I can say is that we might continue in that selling momentum. Since, of course, I started with DXY, I can just go back to DXY briefly so that I can just show you guys what DXY is doing, okay? Because I really need us to understand the kind of price action DXY has been showing, okay? So let's just look at DXY again, okay? DXY, see the price action, steady uptrend, okay? Very nice, clean price action with a steady uptrend. On the daily, we have broken out of that range very nicely, and it looks like we are continuing moving higher, okay, on DXY. Now, this, of course, if we're to say that if DXY continues in a rising phase like this, something like this, okay, then it means that it will put a stop to any upside movement on GU, EU, and also gold. Okay, so let's first go back to EU rather to GU. Okay, so when you come back to GU, this is what GU is showing. Okay, so you can see, guys, the downtrend for GU is likely to start or has already started, and you should see it possibly progressing into the end of the month. Okay, now don't get me wrong, guys, GU is in an uptrend. Okay, if you look at it from from April, we're in an uptrend without a doubt. Okay, but we are going to get a pullback that will take out some of these lows, possibly even as low as our 50% level here on Fibonacci of 1.26032. Then we shall create a sweep. So something like this is very possible. We sell up to here, create a sweep, and then start moving back up. Okay, that's what I'm thinking. Okay, for GU. Okay, so let's cross over to the Nasdaq. So this is what we have on the Nasdaq. Okay, the Nasdaq has a channel that it was in previously. I drew my channel and I left my channel there. This one here, I don't know if you guys are seeing my cursor there. You're seeing where my cursor is there. That was my original channel for the Nasdaq, but it broke out of that channel and started selling out of it very briefly around May, but now it looks like it wants to get back into the channel, or it might already be in it, because if I extend my channels here, this is where we are to the Nasdaq. We are heading up to 20,000, okay, sometime soon. And the fundamentals are agreeing with that, because if you look at some of the announcements from Apple, you're looking at things like Nvidia. Broadcom has also announced that stock split 10-1. Yesterday, Broadcom was up about 12%. Okay, so this is how the Nasdaq. This is where the Nasdaq is likely to move over the course of the year. We might go to 20K. Okay, but for now, there has to be some kind of a pullback. Okay, for the Nasdaq. Now, timing the pullback is the problem. Now, if you're trading the Nasdaq, this is how you should approach it. You need to focus more on how the stocks are doing on that day. Okay? What is holding the Nasdaq up like this is Nvidia and Apple. They have a very, very big weighting on this index, and how the Nasdaq does depends on them. So if we continue to see strength in those two stocks, the Nasdaq could potentially keep breaking records, okay? And possibly keep moving higher. We should see it continuing in those rising channels to move to the upside, okay? If we see any kind of weakness in Apple and Nvidia, and also again see any printing of any bearish price action, then we should see a reversal to the downside. But for now, the bias is a buy on this particular index. Comparing Nasdaq and Dow, Nasdaq is currently at record highs. Dow Jones is off record highs by about 2,000 points. Okay, less than that. Now, the difference between these two indices is because this one has a few laggards that it's been having. Okay, that's why you see that it's not looking as bullish as the Nasdaq. Now, trading the Dow Jones is stuck in a range, as you can see. Okay, from late May to almost mid-April, we are stuck in a range. Okay, we are stuck in a range, and we now have to wait and see whether we break out of this range today and maintain below, because if we do break out of it and maintain price action below that range, the next level for this index is going to be a move possibly to as low as 38,000. Okay, so I'm going to move to the lower time frames to show you guys how to approach it for trading today. But for now, this is where we are expecting it to move. Okay, we need to stay below 38,600. Okay, I'm going to show you guys how Dow Jones did yesterday during the US session. Okay, we need to stay below this. If we stay below this, and most importantly, if we try to take out liquidity around these levels and move down, it has to be below 39,000. If we breach 39,100, we are likely to move to the upside and possibly even test these higher levels around here. Okay, so let's move to the 15-minute. I want to show you guys something on the 15-minute time frame on the Dow Jones. So on the Dow Jones on the 15-minute, look at the kind of bearish structure we're having here. So we took out this level of 39,100. We then sold. Yesterday during the US session, we had a kind of like a tricky move on the Dow. It was showing us that it was trying to sell, but you can see that it failed to take out this level. Okay, which typically happens during downtrends. Okay, typically the market will try to take out liquidity and then it appears to have a sweep. Okay, so I think the same thing is going to happen today. We are either going to come and take out this low we had here. That was yesterday's New York session. And once we take out that low, we are going to now continue selling. Okay, or we might first create a high, but below New York session's high. Okay, and once we create that high, then we're going to now start selling. Keep in mind, guys, the big picture is a sell on the Dow. Okay, however much it tries to make you think that it's buying to create higher levels, every time it tries to do that, it sells. It tried it even after FOMC, but you can see we failed to maintain price action there. Immediately we tanked. Okay, try it again yesterday, we tanked again. Okay, now when you look at the DE40 roll, the DE40 roll is like 5 steps ahead of Dow. Okay, the DE40 roll is 5 steps ahead of Dow. Okay, so which means where Dow Jones is going to go, DE40 has already gotten there. Okay, so which means Dow Jones is lagging, and soon enough we're going to see it getting to where this one is. Okay, awesome. Question time. Yes, Apple is a component of Dow Jones. That is true. Okay, but Apple alone cannot hold the entire index. Okay, we have a number of stocks or components that are affecting Dow Jones. Okay, some of them include Boeing, United Health, most of the consumer staples. Okay, most of the consumer staples, Coca-Cola, all those companies, their stocks are not doing well. So even if Apple is up, it's not enough to keep the index up. Okay, it's not enough to keep the index up. Yeah. Okay. Next question, guys. I'm taking you guys to the stocks so that we can see how the stocks did yesterday. Next question. Okay, so this is these are some of the stocks. Okay. Now I'm going to arrange them in order of volume. In order of volume, then we get which lagged, which one lagged. Okay. So now Apple had 85 million shares exchanged during the New York session yesterday. Sorry. Yeah, this is Dow Jones. Yes. Amazon also had a bit of a lag, but then you have a number of stocks that are dragging. Okay. Caterpillar, McDonald's, American Express, some of the banks as well were up moderately, not too high. Okay. Walmart, Disney also was dragging. Salesforce also drags the Dow Jones a lot. There's a time, Joseph, when Salesforce was down 20% and Dow Jones collapsed by about 4%. Okay. So yes, Apple is a component of Dow Jones, agreed, but it's not enough to hold the entire index. Okay. Awesome. So I think that one is sorted. Let's move to the next question. CHF-JPY, I'm going to have to look at it on TradingView. Unfortunately, I do not have it ready for you. But if you're looking at any JPY pair, most of them are buys, technically. Okay, that's awesome. Joseph. Now, guys, CHF-JPY pairs, most of them are buys. Okay. Even if I've not looked at CHF-JPY in a while. Okay. Technically, you can see the trend we are in. Okay. You buy every time you get a retracement. That's how you day trade it. Okay. You can even add your channel there and you can see how the channel is forming. This is a channel of an uptrend. Okay. Are we together, guys? This is a channel of an uptrend. Okay. On CHF JPY. Okay. You see this? You see this uptrend. Okay. So now the idea is this. How do you day trade it? Bankable women, this is for you. Bankable women. CHF JPY, you are looking for a pullback, retracement, possibly towards open of New York, then you get into a fresh buy to the upside. Typically, JPY pairs will normally tend to be more active during the Tokyo session. Okay, so we have a move to the upside during Tokyo session. We create a high during London session, create a low during the New York, and then we test Asia high during New York. Okay, so you look for a retracement, but for now the trade is an upside trade. Okay, awesome. Next question there. Why is it that gold and DXY are moving in the same direction? Good question. Guys, you know, the thing is, I really love this question from Felix. I've not been seeing a lot of traders actually taking note of this. But if you actually have a look at gold and DXY, they actually have been both trending higher. Look at DXY from December. DXY from December has been moving higher. I'm not talking about today. Felix, I know you're talking about today, but I want you to understand that what you've been able to observe is very, very true when you look at it even on a bigger time frame. So that's a very good observation, Felix. Okay. So you see this, guys. Gold has been buying. Check on gold. Gold is up from December. Okay. Gold is up from December and DXY is also up from December. Okay. But even today, Felix is right when he says gold is up and DXY is up, because you can just look at it from here. Look at it from here, okay? Look at it from the daily change. The daily change is showing us that gold is up, okay? Gold is up 0.5%. DXY is up 0.3%, okay? But also, Felix, when you check technically, gold is also up, DXY is up. It's not true that all the time DXY and gold are negatively correlated, okay? That is not true. Not 100% of the time, okay? Because whenever gold is going against DXY, it's simply because it's during times of safe haven, okay? When maybe traders are going to, investors are moving over to gold for safety, okay? Yeah, but now when we talk about the price action for trading today, Felix, gold might make you believe that it's in a buy, but it might reverse that buy faster than DXY reverses its buy, okay? Meaning that we should be looking for a sell on gold, have a sell limit around PPI highs. In case those PPI highs are taken out, sorry, I should have shared my MT5. My MT5 is here, okay? In case the PPI highs are taken out, then we look for a sell, okay? If the PPI highs, rather we look for a buy. If the PPI highs are not taken out and we get a sweep to the downside, then we look for a sell, okay? Felix, I hope that helps. When should we expect the next news that will affect Euro USD in a big way? Hi, Lennox, good question there. On the calendar, I think the next big event we have for news is going to be, we're done with CPI. We're done with, we have PCE. We have PCE, I think it's usually in the last week of the month. Yeah, it's usually in the last week of the month. Okay. So PCE, Linux, PCE. Okay, guys, I just want to make a quick announcement. For those of you that are interested, this is important meanwhile for traders. Today we have a new episode of the Bullish Banter podcast. It's going to be posted at 2 p.m. on FX Pesa's YouTube channel. So make sure you do not miss it. There's going to be a nice conversation there that I had when I was in Nairobi, me, Rufus, and also Prudence Maximilian from Tanzania. So make sure you do not miss out that that discussion. We're going to be talking about the markets, about trading. So make sure you watch out for it, guys. Okay, on YouTube at 2 p.m. Now we also have a new strategy video that is going to be aired at 4 p.m. on the YouTube channel for FX Pesa. This is going to be on the breakout and retest strategy. Okay, so don't miss out on that one as well. It's going to be available on FX Pesa's YouTube channel. Make sure that you inform your friends that are also traders, so that they can also listen in and benefit from that content. Okay, guys, I wish you all happy Friday, and I hope you guys are all profitable in the week. Cheers, guys. Happy trading, and we talk soon. Okay.